What is going on, everyone? It's Jay with Trader X, and today I'm gonna go over another beautiful red day recap with you guys. So today I ended up taking two different trades on the ticker symbols GRAB and STAB. So the stocks grab and stab, and I took only two trades on them, and I ended up losing a nice total of $150 today. So I'm gonna walk through that with you right now. So if we look at the ticker symbol grab, GRAB, we can see that this morning the stock, since the market opened, just shot up and ended up pushing a total of 15%. So the reason why I found this to be attractive was because, first off, the stock was one of the top gappers on my scanner in the morning. Like I've said before, the scanner shows stocks with the biggest percent change on the day. So that means the bigger the percent change, the more volatile it is, which typically means a lot more people are trading it, and those types of momentum stocks I find very attractive to trade because they offer a lot of room for profits if the stock does go your way. So I ended up getting alerted to the stock once it pushed up a lot and really crossed the middle VWAP. So once the stock ended up having a big enough push, it was one of the top gappers on the scanner, and I was watching it and waiting for it to become overbought and approach this top VWAP level and try to sell off a bit more so I could try and buy a dip and ride another recovery up. And the reason why I saw a lot of value in this stock was because if you see here in the bigger time frame, this stock had a lot of room if it recovered to its previous levels. As you can see here, that's like a 30% push close to the SMA line, and I found that to be very attractive. So I waited for the stock, like I said, to make higher highs and higher lows, approach this overbought level, this top VWAP. It used it as a resistance level and ended up shooting back down. And I got in at the price point 397. After, as you can see here, I waited for it to shoot up, and once it had a big dip down, I waited for it to show signs it wanted to go pop off a little, and I bought the dip around here. Unfortunately, it ended up flushing me. So what I could do better with this stock is just acknowledging potential resistance levels, and if you look at it in the bigger time frame, it's not the biggest shock in the world that ended up reaching highs around this EMA line and then just falling from there. It's always a possibility, and I have to keep that in mind to watch out for potential resistance levels. And this EMA line, when a stock trends below it, typically, as you can see here, we'll just keep using it and keep using it as a resistance level, and every time it approaches it, will just get rejected by it, like it did here. It pushed back up and just got rejected again. So fortunately, this stock could have gone, but it didn't. It's not the end of the world, and I managed my risk pretty well. I gave up only 2.5%, so that's $62, and I was using $2,500 to day trade with. So the other stock, ticker symbol STAB, just like the stock I just showed you, it had a pretty similar pattern in terms of I got alerted to the stock once it had this big push above the middle VWAP, this purple line right here. And like I said before, the stock, when it ends up pushing above the middle VWAP and this previous resistance level it had around here, as you can see, when it tried to come up above here, it ended up getting rejected and falling back down. But when it broke the middle VWAP and this previous resistance level, that's a good sign that the stock is starting the uptrend now, and ended up pushing around just under 7%. So when I got alerted to the stock, once it pushed above the middle VWAP, it was one of the top gappers also. It popped up on the top list. And once it fell back down, I decided to buy in for the dip. And I got in, as you can see, at the price point 1.015. which is right around here. Not the best price point. And I ended up selling at 0.98 once the stock flushed down. So what I did poorly with the stock is I was not aware of exactly where I bought in. And when I sent the order to get filled, I thought I was filled closer to the middle VWAP, but that wasn't the case, and I was filled all the way around up here, 1.015. So that's not the smartest area to be in, because my stop loss would be around the support area. the middle VWAP, once a stock breaks above the middle VWAP, it tends to act as a support now, where previously it acted as a resistance. And because that happened, I was unaware of that, and I set my stop loss a bit lower from where I thought I was in, and ended up taking a bigger loss than I would have liked. As you can see, I took a loss of $86, and that's just pretty unacceptable in terms of my respecting my stop loss. It's so important to always try and minimize your risk on the day. And the stop loss, I ended up losing like over a full percent more than I would have wanted, just due to some careless error of not realizing better where I bought in. But that's why I try and stay away from stocks that trade under $1. It kind of gets a little harder for me to manage risk, pay as close attention to it, but it's okay. At the end of the day, all that matters is that I managed risk, and for a stock like this, it wouldn't have mattered, because even if I got in close to the middle VWAP, it would have still ended up flushing me out. But that's why it's important to really stay true to your plan, and like the other stock here, I also view the potential for this stock to be able to push above its resistance and surge closer to this SMA line and to its previous levels where it was trading earlier in the year. So at the end of the day, no, I can't be too mad. I just unfortunately did not manage my risk well on this stock, and the stock just didn't end up going as well, unfortunately. And I want to give you guys an example of a stock that has gone off, and it has been going off recently in like the past week, so you guys can get an idea of what type of stocks I mean when I say they provide a lot of value. And the stock INDO has been going pretty crazy for about a week now. And as you can see here, it was also trading between the middle VWAP and top VWAP, signaling signs that it is confirming signs of an uptrend. And the reason why I didn't trade the stock this morning was because, as you can see here, even at these levels around 32.50, on the bigger time frames, when it was at these levels of 32.50 right around here, the stock is very overbought at these levels. You can't say otherwise. On every other chart, the stock was at all-time highs. And even though the stock was a top gapper, I personally viewed there to still be room for it to fall a lot because it is so overbought, as you can see here. Pretend that you didn't see this whole green bar that happened right after, and it was around 6 o'clock in the morning when the stock was up here. It looked very overbought, in my opinion. Offered a lot more downside than it did upside, because it could have very easily fallen due to the selling pressure because it is so overbought. And that's why I decided to stay away from it. And looking back, obviously a lot of I coulda, shoulda, woulda, I should have been in this stock, but it's just trying to follow my best practices and being real with myself that the stock was a top gapper, but it wasn't the best deals because it was so overbought in every chart I pulled it up on. So those stocks typically tend to flush down, and if they do it aggressively because they're so overbought, which is why I wanted to stay away from it. But just a stock like that, I wanted to give you an idea of what's possible. If, say, you use a strategy and you bought in around the middle VWAP, you could give it, depending on how much money you got in with, up to like a 5% wiggle room, let's say, for example. So if the stock did stop you out, it would be below the middle VWAP and this green SMA line, which would really show signs that it's falling, but it never did. And if you buy in around these low levels, you could have held. And honestly, if you held the stock, you could have been up a potential of around 67 to 70% just off of the move from right here. So to give you a perspective, if you threw in $1,000 and you made 70% on this trade, you would have made $700 with $1,000. So these stocks are very, once you come across these types of stocks, it can become very attractive because of the types of gains you can make, and you're really exposed to what's possible with trading momentum stocks. So it's just, even though I didn't take part in it, it's very exciting to see what's possible, and I'm just very excited to see the volatility back in the market. It was really struggling the past few weeks. I think just there wasn't a lot of big pushes, but seeing this seeing pushes like this come back, it's honestly just, I'm grateful to see it be back and to have the opportunity to have made money on it. Even though I didn't today, there will still be opportunities next week and the week after and so on. So it's really just a matter of trying to perfect your strategy and learn from your mistakes. I need to be real with myself and acknowledge that this week hasn't been the best in terms of me managing my risk. I've been taking red trades. I've been taking hits larger than I would have liked, and it's been showing me the importance of trying to average into trades. So I really think that I'm going to work on trying to get in with a lighter position size and learning to average into my trade, so that if I do get in originally with smaller position size, and if it were to flush me out, would only be down like half or a quarter of what I would normally be down, and that could really help minimize risk. So I'm going to be working on that. I'm excited to be working on that the upcoming weeks. And yeah, this has been another red day trading recap, but I look forward to coming back and just really improving myself over the next few years. Thank you all for watching, and have a good day.